So year over year, the Canadian dollar is actually the worst performing currency in the G7. And a lot of this is caused by the record capital flight and the amount of people, money, jobs, businesses that are all leaving. Canada is seeing record capital flight, but here's the thing that nobody is talking about is that this record capital flight that is being seen is actually impacting the currency in a big way. So if you look at year to date in 2025, how the Canadian dollar has been performing, it hasn't been good.
We want more money.
And most people in Canada are actually using the US dollar as the benchmark there. But if you use any other currency, pretty much major currency pair, you can see that the Canadian dollar is not performing well at all. So basically, obviously, you've had massive dollar weakness this year. So the US dollar has been the worst performing currency, as you can see here on this comparison. The euro Canadian dollar, the euro's up 10.17% against the Canadian dollar. The pound is up 4.65%. The Japanese yen up 2.47%. And the US dollar, of course, is down 2.3%. So out of the G7 currencies, the US dollar is the worst performing and the Canadian dollar is right behind it. But on a long-term basis, you have seen the US dollar that has destroyed the Canadian dollar, especially over the past 3-4 years. I've been talking about this on this channel since 2022. I remember back at 78, 77, 76 cents, and they are going to wish that they could sell at these rates, and look what happened since then. But if you pull this out and go year over year, it shows how bad it is. The Canadian dollar actually down against the US dollar. The euro has destroyed the Canadian dollar. It's up nearly 10% year over year. Pound is up nearly 5%. Japanese yen is up 1.67%. So year over year, the Canadian dollar is actually the worst performing currency in the G7. And a lot of this is caused by the record capital flight and the amount of people, money, jobs, businesses that are all leaving thanks to the red tape and regulation. And this has been going on for a while, as we'll get into. Canada's global investment appeal suffered its biggest setback since the financial crisis. Foreign investors sold off $16.8 billion in Canadian securities in Q2, the largest divestment since Q4 2007. Just think about where the economy was back then. And then you've got, meanwhile, foreign direct investment, foreign investment made into Canadian businesses is plunging. FDI into Canada fell 39% from 30.2 billion to just 18.5 billion in Q2, with more than half still coming from the United States.
All right, elbows up. Elbows up.
But still, most of the foreign investment in Canada is coming from the United States, and they think that they're just going to move away from this and join Europe. I mean, it's absolutely, completely insane, and it is so stupid when you really think about it. And then you can see how this looks on a chart here, and it don't look fucking good, does it? I mean, these are basically Q1 and Q2 here, and you can see, like, you haven't had a sell-off this bad as long as this chart goes back to 2013. Even during the pandemic, or the plandemic, should I say, you did not have a sell-off in foreign direct investment as bad as you are seeing this year in 2025. So it's no wonder that the Canadian dollar is under so much pressure here. And obviously, the Bank of Canada has no clue about this. In fact, the Bank of Canada has said before that actually a weaker dollar is great for Canadian exports, but that's not the case because a lot of Canadian businesses, their inputs are coming from places like the United States and China, and anybody that does global business knows that what currency are people using? It's the US dollar. They are not accepting Canadian dollars. Everybody is using the US dollar, including China. So that means that Canadian businesses have to convert more Canadian currency to get the same amount of US dollars. And guess what? If the domestic economy is shit in Canada and they can't raise their prices, then what does that mean? Their margins go down. They lay people off. So yeah, the exchange rate is actually a really bad thing when it goes bad, especially when it's coupled with a bad economy, because like I said, the businesses can't raise prices. Now, there are some businesses that can raise prices, and those are mostly grocery stores and things that are impacted instantly, where basically they'll just change their prices by the week, by the month, and you'll see the impacts directly in the grocery store on a weakening dollar. But for other things, it doesn't work the same way. They can't just increase their prices, because then people just won't pay it, especially in a bad economy. And that's what you're looking at right now. So it's kind of a doom loop that's actually caused by this sell-off in the Canadian dollar. The scale of the capital flight implies there are structural issues, not just one driven by US tariffs. The capital exits aren't just passive, but active redeployment abroad, not just in the United States, other countries. Weak domestic investment and a shift in perceived global attractiveness signals investors and firms see better returns and lower risk outside of Canada. And putting it into context with what I just explained with the Canadian dollar and a weak Canadian economy, why are businesses going to set up shop in Canada, and why are businesses going to be more enticed to actually sell their products in Canada when they've got a weakening currency? Because most people aren't going to pay in US dollars for the products. Now, a great chunk will, but not for everything, because then obviously the prices are going to be much, much higher because the Canadian dollar continues to weaken. But obviously the US dollar, that is the major currency that is used for trade and global business. It's not just capital flight, but a flight of confidence. Confidence built over decades can take a generation to be rebuilt if the damage isn't addressed. And that's very true. And you've only got to think of right now what's happening with so many people leaving Canada. You've got a massive amount of people that are leaving Canada. Canada has one of the biggest brain drains in the world right now, with most of that talent going to the United States because it can just get more money. There's just more opportunity in the United States. But lots of people are leaving for greener pastures elsewhere, and that has a big impact on the economy as well, because I speak to these people all the time, and these aren't people with, $1,000 in their bank account. These are people with significant amounts of capital that want to invest in businesses, that want to start up businesses, and they're seeing more opportunity outside of Canada, which is exactly what Better Dwelling is saying here. And if you also go and look at like the Mexican peso, for example, again, it has just been destroying the Canadian dollar. So we joke on this channel about the Canadian peso, but really it's like the Canadian lira, because the Mexican peso is actually doing well, unless you're referring to the Argentinian peso. So anyway, year to date, down 9.28%, the Canadian dollar versus the Mexican peso. Year over year, down around 8.48%. But get this, guys, over the past 5 years, it's down nearly 18%, 17.94%. And a lot of Canadians moved to Mexico. So obviously, Canadians living in Mexico, if they haven't got a global business, if they're still earning money from their businesses in Canada, then guess what? Their income has been reduced over the past 5 years with high inflation by 18%. Now, if you're on a pension, it's even worse. Just think about that. You are being destroyed. You're on fixed income. You've had all that inflation and your income's down nearly 20%. I mean, that's absolutely insane. And the same thing is affecting Canadian pensioners in all places, because the currency has held up so poorly against the euro, the US dollar. In fact, I found this really hilarious though. Obviously, New Zealand and Canada are going through a similar thing right now. Both have collapsing housing bubbles. Both have massive amounts of people that are fleeing the country. And guess what? You look at year to date, how the currencies have performed. Canadian dollar to New Zealand dollar. There's barely any difference between the two. I mean, I find that absolutely hilarious, but it is what it is. And then if you're wondering where the US dollar is going, well, you can see at the top here, this is the 2025 high, and this red line here in the middle is the 2022 low, and it's just past that. It's looking highly likely that it's going to test these lows here, and if it breaks these lows, then it's heading even lower than that, which could be insane, because this low that was created this year, the lowest low low since around April 2003. So just think about that. So the Canadian dollar is really not performing, and it's just a reflection of the overall economy.
Our economy is very strong.
But the thing is, it's particularly weak, and you can look at what's happening with the other major currencies to understand what is going to happen to the Canadian dollar as soon as that US dollar isn't weakening anymore and it's strengthening. You are going to see it just get obliterated and head down to those lows that I was just discussing there. So we'll have to see what happens, but we know it's not going to be good with the Canadian dollar, as it's been in a downtrend now for over 10 years. So anyway, if you've enjoyed this video, I would highly recommend that you check out this video here. And if you're looking for a VPN and also want to help support my work, then please go to expressvpn.com/marketmania. You get the best VPN, and it also helps out the channel. So it's a total win-win. Take care now. Bye-bye.